Welcome to the Money Insights Podcast, where high-income earners come to learn wealth-building strategies that will take them from high income to high net worth. With your hosts, financial and wealth-building experts, Christian Allen and Rod Zabriskie.
Welcome into today's episode of the Money Insights Podcast, where we talk all things money and business. My name is Rod Zabriskie, and if you were listening to that intro and started wondering if Christian had something wrong with his voice, no, it's me. I'm flying solo today. Christian is on vacation with his family, having a great time. And so I decided to just go ahead and plow forward. And today I actually have a really cool interview with Russ Faigen. We'll get to that here in a minute. I'll introduce Russ. Before I do that, though, I want to make sure that everyone is aware of our virtual summit coming up on May 4th. And we have a really cool lineup. We're really excited about it. We have Sharon Lechter. We have Tom Wheelwright, Ken McElroy, Adam Carroll, Chris Larson, Buck Joffrey, Christian, and myself will all be speaking and kind of laying out some really cool content. So please come check us out there. Go to mivirtualsummit.com to register. And we have a deal going on right now, kind of a 2-for-1, pay for one. You can bring someone with you. And so we're really excited for that. Come join us there. One other thing that we've been asked a lot about, I want to clarify, is if you register, even if you're not able to make it or you miss some of the presentations, you can come. We'll send you a link. Come back, listen to the recordings. So if you see the value in it, you're just not going to be able to be there that day or part of the day, then still register and we'll get you those recordings so that you can check out all of the awesome content. All right. So for today's episode, like I mentioned, I have Russ Faigen here with me. He is a financial educator and a content creator, primarily on TikTok. So it's actually really kind of a cool view that he'll bring to the table. He's a young investor. He's tapped into the social media market and environment and has a large following, about 140,000 followers there on TikTok, among the other platforms. And he has some interesting tips for us, especially for people who are getting started. And he talks about the types of lessons that he's learned. And a little teaser, it kind of goes in line with a lot of stuff that we talk about in terms of not chasing shiny objects, but maybe boring is better. But and I would say listen to the end, because I think his best idea comes right there at the end, specific to the way that he invests and the way what he recommends for people. But he's very down to earth. And he even turned things around and asked me some questions. So I thought it was a really fun interview. And so with no further ado, let's get on here with Russ Faigen, financial educator and content creator. All right. Okay, so here I am with Russ Faigen. Thank you so much for joining us, Russ.
Of course. Thank you so much for having me.
Yeah, absolutely. Okay, so we want to get into a breadth of different topics, kind of conversations with you. But first, what I want to do is ask you, like, what was your starting point getting into the financial space?
Yeah, absolutely. So I'm 24. I'll be 25 in November. I graduated from the University of Drexel down in Philadelphia last June with a degree in finance and business analytics. Now, I'd love to attribute my major to like the only reason that I was interested in it, but I actually have to give a lot of the kudos to a good friend of mine, Ben. We went on Birthright together, and when we got back, he basically told me that he'd been investing since he got his bar mitzvah money, and he'd been able to build up his investment account up to $60,000. And I was like, super ignorant to the entire space. Basically, all I knew about it was Wolf of Wall Street at that point. And I was like, well, I got to learn about this. And he was like this incredibly fundamental investor. Like most of his money was in like Target and like just not the sexy stocks.
Yeah.
But he was creating a Python algorithm that was playing one off the other. And he was clearly really advanced for our age group at the time.
Yeah.
But he introed it to me, and I was in finance at the time, and I had some extra money. This was before the pandemic, of course. And I found myself fascinated. And to kind of jumpstart that story, not 6 months later, he founded a company called Wolf Financial with a couple of my fraternity brothers. And we just had a good connection. He invited me to come onto the team, do some work for him. And it was all around the stock market, and more so like creating qualitative understanding for what are normally quantitative ratios, like your price to earnings ratio, your debt to equity ratio. So our goal was to really just help those novice layman's investors back in like early 2020, before the pandemic, help them just kind of get a broad understanding. And I think we actually got in like right before this huge Gen Z push into the stock market. So it was really interesting to be a part of.
Yeah, that's awesome. And since then, you've become a big influencer, content creator, especially on TikTok, but I know on some of the other platforms as well. So what do you, inside of all of that, kind of what you're doing now, and maybe with that background as context, what do you feel drawn toward more than anything else in what you do right today?
Yeah, I find an obsession with waking up, checking news, seeing all of the just miraculous and absurd things that all of these major public companies with billions of dollars can do on any given day.
Yeah.
And I find myself overwhelmed with like, well, what do I share with my audience? Like, what's important? Who cares about this? Because, one day you might have the WWE merging with the UFC. And to me, that's like crazy, especially as a content creator, because, and I'm not sure how much but like Logan Paul just joined WWE. He's doing tons for their company, and there's so much hype around the UFC and influencer boxing. And then you see these two companies come together and I'm like drooling at the mouth.
That's awesome.
So it's easy for me. I have to like take a step back and be like, well, what does 100,000 people care about? I don't know if everyone likes the WWE and UFC.
Sure.
I do.
Yeah. Yeah. And truthfully, I don't know much at all about it. So now I know more. Thanks for helping me. Okay. So you mentioned that you just like to dive into the news outlets and other places. So what information outlets do you use primarily? Like, maybe honestly, I'm sure there are a bunch, but
no, honestly, I'm like really, really attracted to one, and I wish this was sponsored, but it's not. It's Seeking Alpha. For me, again, I'm 24, almost 25, and as much as I enjoyed my subscription to the Wall Street Journal while I was in college, and they did a good job of breaking down articles, Seeking Alpha has just done a few things that keep me and I think a lot of my generation really engaged. They have like top 12 most. Like what's the top 12 most attractive stories right now? And it's all based on momentum on the user platform. So like if I share it with my audience and they all click on it, it's probably going to bump up from 12 to 11 and whatnot.
Yeah. Gotcha.
And then the articles themselves, they just break it down to really easy to understand bullet points and small paragraphs. They make it really digestible, which I can relate to really strongly because I take those articles, which I personally view as digestible, and I try to make them as consumable for my audience as personal or as possible through video.
Yeah. Absolutely. Very cool. And I'll have to check it out. So that's one I haven't done now. So, okay. Beyond that then, I mean, probably our average audience is older, right? I think I mentioned before, a lot of high income people, professionals that didn't even get into their professional career until their 30s or whatever. Right. So are there other information outlets that maybe you're not consuming on a daily basis, but that you feel like, hey, these they're credible, and it also maybe boils things down in a similar way as what you're seeing on what you're looking at now?
Of course. I mean, I've seen a lot of really good stuff on the Motley Fool, Wall Street Journal I previously mentioned, and Bloomberg all act as great subscriptions. If you're really, really interested in markets, something that I played around with a lot in college when I was getting my degree was FactSet, which is like a massive terminal with as much financial information as you could possibly get your hands on in every facet of the business. A lot of it deals with public markets, international equities, really are strong calendars with tons of information on them. So if you want to go above and beyond, I would check out FactSet. It's a really good one.
Yeah, great. Okay, so that one's not as much of the boiling down. It's like one's jump on and really dive deep. It sounds like.
I had to get certified on it actually. I mean, it's super intense.
Okay.
It's pretty. I'd say it's like an industrial version. So maybe if you're leaning towards you need some more information, I've had a lot of fun with FactSet.
Awesome. Okay. All right. So you shared your experience with Ben, a little bit, kind of the evolution of getting here. I want to actually even take another step backwards, because with what you do now, as you look back and you say, okay, I've taken these steps to get to where I am now. Before all of that, what do you think is like the driver that creates the passion in what you do right now?
That is a really good point. It's a bit of my life story, so I'll try and keep it short. I grew up, I'm like very lower middle class Jewish, strong Jewish roots, and my dad was a serial entrepreneur. Unfortunately, like the worst kind of way. He owned a beer distributor, seltzer distributor, mattress factory. Currently owns a hot dog shop, but he always finds himself kind of selling, selling for a loss, restarting new. And I like watched him basically break his back growing up just to like put me through a really good school. And I was like, I never want to do that. I do not want to be an entrepreneur. I want a desk job in finance. I want to make $100,000 a year, live comfortably, never break a bone. I've broken multiple bones in my life already, so failed on that one. And here I am in a pretty entrepreneurial space. So I'd say some of the passion I think comes from my genes as much as I was trying to escape it. joining that startup changed my life. Although like didn't have a great ending with this company and my fraternity brothers, I like saw what it felt like to be in a really linear company with a small team wearing lots of hats. And before that, I was only internshipping at middle-sized to larger companies where you have a much more pyramid scheme. So
yeah,
I got a taste for entrepreneurship there. And I was like, okay, I'm still going to stick to the idea of I don't want to like own my own company. Then again, I own Invest with Russ. So I kind of felt on that front. I was like, I want to stay in the fintech space. So aside from content creation, I find myself working with a lot of fintech companies, doing marketing with them, content creation, and kind of getting to live out that dream of being an entrepreneur without as much liability as the founders themselves.
Gotcha. Okay. So that's an interesting, because it sounds like the difference between the way you described your dad's experience and what he has done and even still now is doing is maybe just a little more focus. Is that kind of what you're saying?
He's always very mom and pop. So I've found myself really interested in tech,
I see.
and the finance space, and a lot of it has to do with the COVID boom and this new generation of investors and just all of the resources we have at our fingertips. And I think that's what's pushed me into this space. I'm not really sure what drove my dad to do these smaller companies and what drove him to stick with them. And, because it's so different. A mom and pop shop, an SMB, a small, medium-sized business to a startup. I mean, they're two different beasts. Even if they have the same amount of employees, you're dealing with thousands versus millions, millions versus billions.
Right.
And so it's a great question. I don't know why he chose to stay in that simpler space. We'll have to do a second podcast and I'll get you.
Sure. Yeah. Yeah. Well, and like in my own experience, you kind of roll with what you know, right?
Right.
So maybe, and
always did retail. He was always selling. He started with the mattresses. He went to the seltzer, went to the beer. And then he had this dream of like selling ice cream down in Miami, Florida on like an ice cream cart. And I think that he kind of paired that dream with the hot dog shop. So that's,
yeah, very cool. Well, that's awesome. Just kind of almost like you're carrying on your dad's legacy, but just like the next generation of the legacy, right?
It's interesting too, because I have siblings and I find that I'm like the only one of the three that have really taken after my dad, no matter how far I tried to stray away from him.
Right. Yeah.
So yeah, I attribute a lot of my to just my DNA. I think I've always. Yeah. I'll say this as well, Rod. I'm so sorry. I went to a really wealthy school growing up, and I had no money, and that is a really weird place to be in. I went to a liberal arts college prep private school from kindergarten to 12th grade. I was surrounded by them my whole life.
Yeah.
And so I was surrounded by money, but never had it. So I always wanted it. And I do think that had a lot of drive and passion. When I got my first job at 16, 6 years before that, I was giving tips out at my dad's drive-through beer distributor, like I mentioned. So I've always been kind of working alongside business. And I always was very, very materialistic growing up, wanted the new video games, the new clothes, because I wanted to fit in with my classmates. So yeah, I started getting my own jobs, getting my own money, buying my own things. And then it felt like second nature by college. And then now I'm 24, juggling a few jobs, and it almost feels like second nature because of what I was doing in college.
Yeah, very cool. And it also, you had that experience, like you said, of being in the more traditional business environment as well. So at least you understand that contrast.
Oh yeah. Right? I had a cubicle. I was 20 years old, 2019. I had a cubicle. I was chugging Excel from morning to night. So I've seen both sides of the field, and it's also kind of what took me to marketing, even though I like really want to harp in on the finance space. I think that marketing gives all humans like a really creative side of business.
Well, I think it's critical as well. If anyone who's going to be entrepreneurial, marketing is critical. I also heard you on another interview talking about just being able to speak accounting language and all those different things. If you're going to run your own business, these are the kinds of things that you have to at least understand. You don't have to do it all necessarily, but you have to understand it.
I find myself working my way through the different backbones of business. Rod, where do you think I should go next?
Well, okay, it's a good question. So clearly you're good on the tech, right?
I would say I'm no developer, I'm no engineer, but I have a really good understanding for what they're doing and a pretty good understanding for product management as well on like the UX UI side of a platform.
Yeah. Well, maybe I'll defer that question a little bit. Hopefully by the end of the conversation, it'll help get us there. Cause I think I'll get you there. Okay. But so let's go back to the financial, like the personal finance, your approach, that kind of thing. There's a lot to think about when it comes to investing. So what would you say are the 2 or 3 most important things that new investors should be considering as they're getting started?
Oh, it's a great question. I mean, the first thing I was ever told was don't invest what you're not willing to lose. And
Okay.
I always was like, oh, so you're gambling. And the better way I look at that now is like, you just shouldn't want to touch that money, right? We can get into capital gains tax. I'd like a lot of your audience understands maybe the difference between long-term and short-term capital gains tax. So if you're going to put your money in an investment account, don't think of it necessarily throwing away, but you don't want to touch that. You want to invest with a goal in mind, right? So I personally was fortunate enough to have a tradition or beneficiary IRA left for me when I was 2 years old, which I didn't know it at the time, got my foot in the door. It taught me about a Roth IRA eventually. That's my second form of investment. And I now have a 401k. That's my third form. So this personal investing really shouldn't have to do with retirement. I should be using that for something really specific. And it'll be for a house. That's my goal. That's what my personal investment account is for. So that's rule number one. Invest for, maybe even rule number one and number two. Don't put money into the market unless you're willing to lose it or part ways with it for a long time. And two, make sure you're investing for a goal.
Cool.
The third one, and again, just really good for novice investors here, is really take your emotions out of the market. And it does streamline along with like, just be ready to lose it, because I've found through my audience time and time again, so much emotion leads to the polar opposite decision of what you're supposed to be making, because when markets are collapsing, you're freaking out. You want to sell everything. That's typically the best time to buy. Vice versa. When the markets are riding and you have $10,000 in profits, you want to sell, or you want to buy more rather. Apologies. You want to buy more. You're like, this feels great. You feel the dopamine dripping into your system with every dollar that increases. Let me buy more so I can make more. Nope. Probably the worst time to buy. Probably the best time to sell. So those three are really what I preach to like someone that's never pressed buy on a stock before.
Cool. Okay. I'm going to latch on to the third one, because in one of the interviews I heard, you said when you invest only to make money, you're investing on emotion. Can you expand on that a little bit and tell us really what that means?
Yeah, a lot of people in my generation see investing as a form of gambling or just a quick money side hustle, whatever. Like there's so many sexy words you can use, and they like to be floated around TikTok. But if your only goal is to invest to then see the stock go up so that you can sell for a profit, go buy Bitcoin, because that's what Bitcoin does, right? And I'm not even a hater of Bitcoin, but there's not a lot of fundamentals. There's not a lot of news that's like, there's no inherent value or tangible value associated with Bitcoin like there is with a stock. So when you're investing into a specific stock, you want to have high conviction. You want to feel like you've researched it. I like to tell my audience, you want to feel confident in it. If you invest in something and you're really confident about it, you understand it, and you're not just investing to make money off of it. You're investing because you see a good opportunity, because you really like the product. You're not going to be as emotional. You're going to treat it a lot more. And this is what I really like to say. I'll bring it all around here. When you're at your favorite restaurant, Rod, and it's a lunch special, you are way more likely to go enjoy that lunch. Vice versa on a Black Friday, right? If you shop at American Eagle every day, but on this one day, American Eagle clothes are 50% off, I guarantee you're going to want to buy those clothes because it's the same quality. You know what you're getting. It's just discounted. As long as you know the stock you're getting through and through, like the clothes you're wearing on your body and your favorite lunch spot, go enjoy that discount, but have the conviction on both sides of the table. Make sure that you're not freaking out if it falls more, because you're confident in your purchase. That's kind of my spiel on that one.
Okay. So maybe just to reflect that back, it sounds like what you're saying is that you have to actually like become educated on things. And maybe this just fundamentally goes without saying, but like hearing from others, my friend was successful investing this one, or even like you said, myself, like, hey, I've seen really good results from this investment that I made. I got to go buy more of it. That may or may not be. I'm going off of emotion of what it was.
Have you checked the price to book ratio? Do you know if they're trading at a valuation that's overvalued? Like you have to check in with the fundamentals. This is all mathematics at the end of the day.
Right. And you could be like, the answer could be, yeah, I wrote it up to here, and the decision could be to buy again, right? If it was, again, let's just say Amazon in whatever, 2008, 2009, then yeah, like that ride kept going, and obviously ups and downs. So, okay. Well,
or even Facebook, which a lot of people bought in after 1 year or after the first day of IPO, but I believe a year after it was actually returning negative still. I mean, if you believed in the power of the internet, social media, and you understood how important community was, then maybe you would have kept buying into Facebook and not been so short-minded.
Yeah, absolutely. Okay, very cool. So maybe this is an unfair question to ask, but I'm going to ask it anyway. So how would you compare yourself and just like your philosophy, the way you approach what you do, to some of the big personal finance gurus like Dave Ramsey or Susie Orman, like the media, guys out
It's a good question. And I don't know if I would compare myself to anyone in particular, which I'm happy to say. I'm happy to be my own person.
Nice.
I am still figuring out who the type of investor I am. And I love that about myself. I love that I can be transparent with my audience about it, because I promise you I didn't know everything 3 years ago. And chances are I still don't know everything. I'm still going through my first real recession, right? Like, what's cool about my channel is you kind of get to feel like you're joining along the journey with me. I'm going to do my best to give you all the information I know, but at any given moment I can be told otherwise. So 2 years ago, when I got into the market, I was doing option calls on VIX, which is like the fear index. And I was like making $500 a day. But if you asked me what an option spread was, or if you asked me what it meant to be bullish or bearish, I probably wouldn't even know those terminology. I was just gambling. And then I got into SPACs. And I was like, what are these? Backdoor IPOs. This is cool. This is cool stuff. Oh, this is a massive company. But the problem is you don't understand why they're backdoor IPOing, what the regulation is like. How big is this company? Because this company might be IPOing at an overvalued valuation, but the stock's only $10. So it's going to go to 20. It's so cheap. It can't go any lower than 10. And then I got into buying tech, concentrated tech. Oh, the next Amazon, the next Tesla, the next right? Trump. Because I'm young, I have time on my side. These are all mistakes I've made or learning lessons more than anything. And now I'm starting to value more fundamental. I've always been a fundamental researcher, but I'm starting to value a slower approach to investing, a simpler approach to investing, with kind of the still fun and flair, right? Like if I see a cool company, for example, I'm not sure if you've seen in the news, but there's like a deadly fungal infection sweeping across America right now. And it's in 35 of the 50 states. And as of last week, only one company had the solution. Only one company had treatment advantage. And it was called Synexis, and they were publicly traded, and they were trading for like $2 a share. I think they were like less than $1 billion company. And I was like, this sounds cool. I saw Moderna, like, I understand where this could go. I put like $20 into it, right? Like I've learned from my mistakes. I'm not investing $500 into Synexis, but yeah, let's like follow along and see the journey. And then they got a huge licensing agreement with a massive, I don't want to mess it up. I want to say it was a huge company in Europe that deals along the same distribution. And they shot up 100%. And I got to enjoy that win with my audience, but at no space am I like, that's not the type of investor I am. Like, I'm glad we can play this one, have some fun together, but that's not the goal of my channel.
It's interesting just hearing you kind of walk through the process of where you've come over the last few years. It actually mimics a lot of, I think, what I've seen in investing. And I talked about this before, but we work in a lot more of the alternative space, real estate, things like that. Well, the same thing happens. I guess it doesn't matter where you're investing. It's easy to get that kind of like chasing the shiny items, and you can spread yourself thin. You can make bad decisions, etc. And ultimately, where I see people in their journey go is it's to more of the, let's call it boring, right? Or the more mainstream types of things. But like you said, it's slowing it down. It's understanding it. Maybe you can't start there. Like maybe there was purpose behind your journey to get to learn lessons, get to a place where you can slow it down and make better decisions. But maybe, just maybe, from a starting point, if people can focus on just some of those fundamentals as their starting point, then maybe you get there more quickly.
Yeah. And I think it also has to do with you making the decision of, do you want to create your own journey, or do you want to put in the additional time to learn from others' mistakes? I want to say that 2 years ago, I thought I was learning from others' mistakes. Clearly I was making my own. But I was really getting my feet wet. I'd get a brand deal, maybe it was like $1,000 I got for a video. And sure, I could have put that in my savings account, paid rent with it, bought a Gucci bag, which I've never did. No, I wanted to invest a lot of it. Like, I was making this money for the first time ever. I had my own business. I wanted to invest it, and I was having a lot of fun doing it. I was trying different companies, and like ultimately I was getting my feet wet and learning from my own mistakes. So I thought I had it right. My whole thing was like, invest 30% of your portfolio into the S&P 500. That will act as your anchor, and then have fun with the other 60%. I don't want to show you my portfolio right now, Rod. It doesn't look too good. That 2% is not doing too well. Of course, the S&P 500 and like Apple and maybe a couple other companies are hanging on for dear life. But I've definitely learned some cool lessons. And I think these lessons can be for anyone. I think that anyone in any age of life can learn just to take a step back, slow it down, and understand like the normal way of doing things is probably the normal way of doing things for a reason. And unless you're really, really special and want to put 20 hours a day into researching a company back and forth, you're just never going to understand it well enough to really see behind the curtains of this company.
Yeah. Cool. Well said. All right. So let me expand that a little bit more on just the whole real estate investing and alternative investing space, because we have a lot of people who are skeptical on the stock market. Okay. And that may be wild for you to hear.
No,
let's hear your response to that.
I'm very skeptical of the stock market right now. Again, I know nothing, so take my opinions with a grain of salt. I sold all of my stock on this past Friday.
Okay.
All of it, except what I had in the green, because I don't want to pay capital gains tax on it right now. I have high conviction in the few stocks that I have. I sold close to $40,000 in stock on Friday for a massive loss. And I did it for a few reasons. The one that I'll touch on first is I have no conviction in the market right now. And a lot of that has to do with, it has to do with so much. It has to do with that like only 5 or 10 of the S&P 500 companies kept the entire S&P 500 positive over the last 3 months. It has to do with the fact that like inflation is still at 6% and they wanted it 2%. Banks were failing last month, but companies' price to earnings ratios are still at the standard deviation that qualifies as overvalued. Facebook was up 100% in the first 3 months. Nvidia was up like 85%. These companies, there's like an AI bubble in the middle of a recession, which is like driving certain stocks up for no reason. The housing market the housing market. I don't want to sound ignorant on. I really have been trying to learn more about real estate, and maybe you can educate me a bit, Rod, but it looks like the housing market's going to be in a pretty tough place in the next 3 to 6 months with no rate cuts coming. I mean, you guys in the housing market, real estate industry have kind of been waiting on those cuts, kind of bearing the losses. And with no cuts, I mean, you either have to raise rent or you're going to lose rent. You know, there's a lot of issues with the housing market. Airbnb is dealing with a lot of issues. Yet people are still traveling like there's no tomorrow. I flew back from Florida. I texted my girlfriend this, Roz. I'm sorry for the tangent. I texted my girlfriend because I was waiting. I have an American Express Platinum card, so I can get into the lounges. I waited in line for 20 minutes to get into a lounge in Florida. Yet we're in a recession, but everyone has the money to pay an $800 annual fee. Like there's so much in the economy that's not adding up right now. So I said, I'm going to take a tax loss. I'm going to harvest those losses. I'm going to allocate my funds because the stocks that I'm down 40% on, it's going to be a long time before those reach break even. It's going to be a very long time. So let's reallocate those funds. Let's put them in safer spaces. Let's take a step back from the market, let it calm down, because we just had a crazy bull run these last 3 months. We had 2 Qs of increased gains, which hasn't happened since like the beginning of 2020. And I'm trying to be a bit more responsible with my money for the rest of 2023, because I think we got ourselves into like a little bit of hype and happiness, but I don't foresee it lasting too much longer. I do agree, disagree. What do you think?
Yeah, no, and actually what you've just described, I think gets at the heart of why a lot of the people that we meet with every day are skeptical of the market, like 100%. Like they're not getting in, they're not. A lot of them are getting out so that they can move to other spaces. So now I'm going to circle back and answer your question you asked earlier. What should you be looking at, or could you be looking at? Again, I shouldn't, pretend like I know what you should be. But here's an idea. When people talk about a diversified portfolio, most Americans, if I say those words, most Americans think my stocks, right, or my 401k or wherever I'm invested, but it's in the stock market. And so I need to make sure that I have a variety of blue chip and tech and bonds and, all the different categories so that I'm diversified, not across categories and across companies inside of those categories, right? The whole thing with mutual funds and everything else, ETFs. And what I think most of the people that we meet with every day would say is diversification goes way beyond what that stock market portfolio is doing. So for example, our typical person might have maybe 10 to 20% of their net worth in the stock market. They're going to have, and a lot of them, especially if they're business owners, a lot of their net worth is going to be in the business. But even if not, then a lot of it's going to be in real estate, and not their primary residence, even though that's part of it, right? That's obviously creates net worth, right? If you're in, you have an asset that grows like it did over the last 5 years, then that's going to be part of it. But it's their non-primary residence real estate, primarily multifamily, is kind of one that a lot of people gravitate toward, and not even necessarily buying your own properties. A lot of people in our community do buy, their own duplexes or properties, but in a lot of cases they're getting in as syndicators, as limited partners on much larger properties.
Yeah,
but with
an accredited investor in a way.
Yeah, exactly, that kind of stuff. And I would say most of them are accredited, so they can. But even there are a lot of syndicators that we know and work with who have deals that non-accredited investors can get involved with as well. So anyway, that there's a thought for you just to consider on.
No,
as
Rod,
it relates.
my mind. So I live in New York City right now. I've been working for a financial tech company in the startup space, social finance. Discord meets investing. Awesome company. Love the guys. They did not make it through this recession. So I am looking for that next thing. And I actually am looking to move down to Texas, specifically Austin. I have family down there. And I'm really highly considering taking that money that is sitting in my cash power right now, and putting that towards a multifamily with an FHA loan. And kind of getting into that space and making videos around that space, getting a real estate license, starting to learn. Yeah. It is a space that fascinates me, and I am totally on board with what you said, which is that a diversified portfolio doesn't just mean a diversified portfolio of stocks. Mm-hmm. But I did want to ask you, in your mind, do you have any expertise or understanding of the difference between being an accredited investor in a portfolio of real estate, a brand that I've never used and have no say in, but I know Fundrise exists is like a Gen Z version of that, versus like investing in a REIT, which is a real estate investment trust, for anyone that doesn't know?
Yeah, it's a great question. And I wouldn't say I'm an expert in that world, but a REIT is, as I've looked at them, usually like a portfolio of properties. So someone might say, hey, we specialize in multifamily, or we specialize in retail, and we're going to have this portfolio of whatever, a half a dozen or a dozen or more different properties that all exist inside of this REIT. As compared to that, what I see for people investing on a syndication level is it's a property. And there are funds of properties that you can get into on the syndication level, so I won't pretend like that doesn't exist. But I would say in most cases, it's a property. I'll give you an example. I've invested in a multifamily property. It's in Phoenix. I can drive down there, drive past it, look at it, know what it is, and get my quarterly reports on what's happening and updates, and it's that specific property. So, and so what I do and what I see other people do is you kind of build your own portfolio instead of the REIT, where you're saying, hey, you go build this or take this existing portfolio and buy into it. It's kind of creating your own.
In a weird way, it goes back to what we started this conversation out with, which is like having high conviction and doing your research and becoming confident in the stocks you invest in.
Yeah.
If you invest into like Toll Brothers, like sure, they're going to be making houses all over the country all the time, but you don't matter to them. You have zero say, and you're basically just tossing your money in the air and saying, I hope you duplicate overnight. Yeah. Whereas when you get to look at the blueprints, analyze the term sheet that they send you and the one pager about the property and why they think it's going to do so well, and the education system, and they're building hospitals, and there's food coming up, and this would be great real estate to invest in, then you feel really good about investing in it. And then you pair that with the real life aspect of visiting it, and you really have something there.
Yeah, and I'll take that a step further because it's kind of like investing in the jockey, because the operator makes the difference in the property. Like all the analytics, like what you're saying, could be right. Could be the right demographics, could be the right location, et cetera, et cetera. But without the right operator, then it may or may not go right.
Yeah.
So yeah, you absolutely want to put a lot of your research into operator. What do they? How do they do things? How do they analyze properties? What do they do with them once they have them? What's their exit strategy, etc. Then, like for me, the property I described in Phoenix, by the time that property came up, yes, of course, I looked at the pro forma and everything they had to say about the specific property, etc. But it was the confidence that I had in the operator that drove me to it. Like it may have not mattered what their next offering was. I was ready. I had confidence in them, and I was ready to jump in.
Yeah, I have a friend who I'll have to put you in contact with outside of this. He runs, I call it private equity for real estate because that's what he does. He goes and finds distressed equity. He builds momentum around it through accredited investors. Then he funds the project and he force appreciates it. And then he pays dividends to his investors. And it's an area that I'm really interested in. I think serves a lot of value. I am curious, what other alternative investments do you really find fascinating in this space? I'm guessing you're not really into Jordans these days.
No, not so much. I hear like a lot of people who do, and not only the thing that I can't get past is there are the Jordans that I can hold in my hands, and I can get that. It's the Jordans that exist in the metaverse that are not physical. That's the part I just can't wrap my mind around.
I had a company pitch me because I work with fintech companies. I have someone reach out to me, founders, and pitch me on ideas, and I'll consult. And they had a cool idea. It was like mortgages for alternative assets, or at least that was the wording I used because to me that's what makes sense. But they did it in the most ridiculous way. They were like, so here's how it's going to work. It's all going to be on the blockchain. You're going to have to buy Jordan coin. And when you buy enough Jordan coin, you can use that coin to actually buy the Jordans. And the way they were explaining it was you can invest on a valuation. So maybe Jordan's worth $200 today, but you only have $100. You buy 100 at a $200 valuation. If it goes down or up, then you're buying it at that next valuation to fulfill the full purchase. And I was like, just do mortgage, just do buy now, pay later. Like, why do you have to do this on the blockchain? I don't need Jordan coins. I want to hold my Jordan. Like, you're onto something here. I get where you're going, but why do you gotta bring the metaverse into it?
That's great. Well, I'm really glad to be talking to someone who's half my age because I just turned 48, so we're right there, and who at least on that level feels similar to what I do. Like, if I can hold it in my hands, I know what the value is. Like, and I have it, right? I know I have it. When it's in the blockchain, I think I own it.
Yeah, right? Well, I'll tell you what. I sit right in the middle. If it's a picture, a digital image, I could care less. But there is a place for them to fit, especially with real estate. I've always been obsessed with there's two sides. I've been obsessed with this one idea where let's elevate the idea of a REIT. Like if I buy my platinum Marriott card NFT, Marriott's a bad example. Let's go apartment complex. Like I have access to the King Suite 2 weeks a year, just like a timeshare. But I also get to go to the quarterly events and I get this, and I get like a 1 basis point commission for every time someone stays there, whatever. Like let's elevate that. And in a similar way, you can actually do really cool stuff with like Ethereum, where if you like put the house's deed as an NFT and you store it in your Ethereum wallet, and then you create all kinds of smart technology like your Ring doorbell and your lights, and you put those on your Ethereum wallet, then only those with access to the deed can activate the Ring doorbell and all that stuff. I think that's cool. It's just like smart homes, but supposed to be safer. Because like doorbell, I think Ring is owned by Amazon. So like, for example, there's a company that just owns that camera and is letting you operate it. So it's the kind of that premise. But I would be really interested to see if the real estate investment trust industry kind of gets affected by NFTs. I look at it kind of like the internet, where it's going to die down because people use it for dumb reasons when the dot-com bubble happened. But I think the technology is sound. It's just about applying it to the correct level. And it'll always be a medium where it's like physical and digital together.
Mm-hmm. Yeah. Very cool. Okay, but getting back to the answer to your question, when you were saying, hey, like what are the variety of different alternative assets? Before we leave real estate, there are just so many different ways you can invest in real estate. Okay. So, for example, you said you're moving to Austin. You're talking about getting into some sort of multifamily or rental property. Well, what if you? And I know this isn't like groundbreaking, but they talk about house hacking and different things like that. Like you buy the property, you live in half of it, you rent out the other half, or that's especially as a starting point. Like for someone who's trying to get into that space, understand what it means to own a property, to manage it, to keep it up, right? Be the landlord, so to speak. that part is not for everybody. There are a lot of people who are turned off by that. Like, don't tell me I need to become the landlord. And so there are a lot of different ways. The obviously the peer type of space is great, or you don't even have to get into the mortgage or the properties directly. You can get involved in mortgage funds, or like you talked about, we distressed mortgages. The companies that buy those and renegotiate the terms with the homeowners, so they can stay in their home, but on terms that can be work for a lender, etc. So there are a lot of different things that are kind of springboards off of real estate, but that experience of being in the property, seeing it real life, will give you insights that you can't get otherwise.
Yeah, no, it's a great point. And I think ideally, I love the idea of house hacking. If it all goes perfectly, I want to get a quadplex. I want to live in 1/4 of it and spend a year renovating it so that I can eventually rent it out. And then get out of it. And but you kind of hit the nail on the head here. I have a lot to learn. Anyone can go get their real estate license by reading a book and taking a test, but I do not know how to change a sink. I do not know how to put a fridge in. I do not know electrical wiring, and I definitely don't know what to do if my basement floods. So there's a lot to learn. And the best way to learn is by getting in those issues and creating good relationships, and getting the really bad relationships with the contractors that screw you and charge you a lot of money to fix nothing. And luckily, I'm young enough to kind of deal with those issues and kind of bounce back still. Yeah,
and you'll make mistakes on this side, just like you talked about. But again, as long as you're learning from them and using those as a springboard to get into, better places for yourself and learning from others, etc. So there's a little bit for you. But also just in the alternative space, I mean, we also talk a lot about how all the different ways that you can own your own business. Right. So there's obviously the entrepreneur who starts their own business, but then there's that person's friends who have an opportunity to invest in them because they believe in that person. They see, promise in what they're doing and the idea and et cetera. And so they can invest in that still as a closely held business, but they're part of it. Even, beyond, in that closely held space, there are a lot of different ways that people. So for example, we talk about a surgeon who has an opportunity to buy into the surgical center that they work in. Right. They've now, even if they work for a hospital system on the practice side, they now have an opportunity to own their own business, quote unquote, within that surgical center and its, operations, or even if it's just the real estate. So kind of building off of a lot of things that you said in terms of like the what and where you are and the opportunities that come up to you that are unique to you because of who you are and where you are. Don't discount those things. Don't be out looking for all the shiny stuff that's across the country or across town and ignore the things that are right in front of you that are opportunities that you can take advantage of much more easily than you could all the other stuff.
Great advice. I really appreciate that.
Cool. Okay. All right. So I'm actually going to pivot here a little bit. So we've talked about all the investing stuff, but because you're on TikTok, I just have to ask you, because I'm old, right? I already told you, how would you as a content creator suggest people approach TikTok? There's so much out there and it takes an investment of time, right? For busy professionals jumping in and there's a willingness to put that time in. But if I want to make the most of that, what would you suggest?
Yeah, it's funny, right? We can spend the first 30 minutes talking about finance, but at the root of this, I am a content creator and there's a whole different industry and strategy to that. So I'd love to give a little bit of advice on this. TikTok in itself is a really unique platform because people want to just know who you are. They don't, and I'm a hypocrite. I button up my videos because I want to have good quality and I want people to be engaged. But at the end of the day, for a business, for a brand, for a small to medium sized mom and pop shop, you got to make it feel like the audience is your son, is your child, is your family members sitting in your restaurant right next to you. And you got to be transparent with them and you have to be authentic. That's a really hot word right now in content creation, is authenticity. Now you need to nail the bench lines, which is you need a good hook. You need good quality. You need good lighting. If you took this away, I don't know who's watching this video, right? You need good lighting.
Yeah.
But once you have a base, the strategy, you kind of build the building blocks of what good content looks like. It's just about sharing your experiences, sharing your journey, being personal with your audience, sharing the losses and the wins. The SciNexus thing could have gone one of two ways. And I share both sides. A week before SciNexus went up 100%, everyone was selling the news because the fungal infection was spreading. So people were trying to sell because, it's hot right now. The stock was up 100%. So you sell. And I was like, oh, well, I just shared this video with my audience and now the stock's down 20%. It's like, we're losing together. And then the next week we all shared a win together when it went back. I think that level of personal authenticity, when you pair that with consumability, another great tip is to add value to people's lives. If all I talk about is my day in the life, what I'm doing, dude, I promise you, no one cares about anyone but themselves. So how can I add value to your life? Here's how you can do this. Here's how you can achieve this by watching my video. Here are 3 things that you didn't know, right? At the end of the day, people are on this platform in their free time to get something.
Right.
So I don't think anyone is going on TikTok to learn about, how you make well, that's actually a bad example. So many people watch people make coffee. You kind of get
anything, right? Yeah.
And it's really important with brands. Every brand these days has this idea of like, we need to make our brand famous. But why isn't the CEO daily vlogging about the struggles he goes through when he's trying to pitch his idea to the third VC that shut him down in a week? Like, that's what I care about. And I didn't know anything about the venture capitalist market. So what are tips that helped you get to that call, get to that interview that got you into fundraising? Where did this idea even come from? Like let's get into your brain. Let's learn about how you got to where you are at share value, share your win, share your loss. It's a simple formula. Just be yourself.
I like it. Okay. All right. So while we're on TikTok, though, we also have to talk about the bans.
I'm here for it.
So I understand that governments are concerned about like information gathering and that kind of thing. And I'm not an expert on app architecture or anything like that, but like, what would it take for an app to access sensitive data on a government computer if someone is accessing TikTok?
I have no idea.
What's
opinion, I think that it's just like a bigger problem. I think that everyone has our data, and I feel like I'm just gonna be redundant with the rest of press and media these days. But there's 2 sides of this story, which is like China 100% has our data. Like whatever the CEO of TikTok wants to say, like the president of China has our data. It is what it is. But so does the president of Meta and the president of Snapchat and the president of Instagram and Meta.
Yeah.
You get it. YouTube, They have it all. And a lot of these other, whenever, like up until a year ago, Apple didn't even allow us to disable cookie tracking like that. Even if you have an Android right now, like every website you go on is tracking your cookies, your data. Like we've been having our data tracked forever. And from what I've learned in the last couple of weeks, like we're one of the only countries in the world that has no data protection policy, no regulation around data protection. You go to Europe, they have an entire section dedicated to data protection because it's 2023 and people steal data. It's like it's like a lot of people think we're in a Cold War around data, So it's basically our government is trying to play catch up, and they're doing it in one of the most insensitive ways, just based off of what the bill has to say. The bill has a lot to do with sending people to jail for 20 years if they're on a VPN, which is a service that, unless you're 65 or older, like is a very relevant service. Like some VPNs to go get The Office in London because it's not on Netflix in America. Point is, VPNs are very accessible, and you're trying to mandate a bill which allows you to access our devices without warrant if you're suspicious. And so that's the problem that I see with the TikTok ban, is this larger bill that our Congress is trying to shove down our throats, thinking that people aren't going to pay attention. And I don't think I'm biased in that because I've had the opportunity to read the bill, some words of it. I'm no legal expert here, but I think it's obviously a problem. Like I think data protection is a problem, and I think it needs to be addressed as a whole. If TikTok isn't going to get my data, I don't want Mark Zuckerberg to have it either. I don't think it's black and white here.
Yeah. Well, and that makes more sense to me than like, cause it just comes across as disingenuous when they're saying this is the reason why we need to ban TikTok. And when all the other platforms, it's all there, right?
And then
they're all doing the same thing.
We're trying to protect children, and you can throw a million reasons why we're not, and there's no reason to get into that one. But yeah, it feels targeted, and it feels like our Congress is trying to manipulate and use excuses when you could be honest, transparent, and share. Like there are Congress people on TikTok that are doing way better with their audience than those that are just sticking it to the textbooks and not using social media at all.
Gotcha. Yeah. Cool. Okay. That's obviously a little bit off topic, but I just had to, because, it's not every day we have a TikTok content creator on it with us. So,
exactly.
Okay. So as we finish up, what's one final kind of parting thought you have for new or even seasoned investors?
One thing that I've had in the back of my mind for the last 3 to 6 months is that we're starting to come up on a presidential election, which has a huge impact on the stock market. And there's like seasonality on a 4-year basis to the stock market based on election periods. The market goes flat and then it kind of dies. And then as the rally for the next election comes up, a lot of people get hype and motivated. And then as soon as the election happens, it dies and goes flat again. And we're past the 2-year mark. And so for that reason, the market should start to rally, especially as we really start to get into next year or the end of this year, when like a lot of rallies go on.
Gotcha.
But we're not out of a recession. And one of our presidential candidates is currently in the city I'm located in. He just surrendered himself to the police. So there's like a lot of questions at play, and inflation is 6%, and banks are failing, and the real estate market is hanging on by a thread. But at the end of the day, we're about to have a presidential election. And the last recession of this magnitude was 2008. President Barack Obama was just coming into office, if I remember correctly. I was only 10 years old, unfortunately. Yeah. Maybe you can shed light on your past experience. How did that work for our country? Like, what was it like coming out of a recession in an election? And obviously the stock market started doing a lot better in 2008. And by 2009, it was really back to where it needed to be. But I'm kind of curious if actually you could shed some light on me here.
Well, to me, it's crazy how often, kind of like you said, those changes in presidency coincide with crazy things happening, because even though it was very short-lived, the COVID change, it all kind of was happening
right around the election.
Right. So, but here's what I would say with that is the cycle just seems to keep churning. Like, whoever is in power, we hate them. we want the other party in power. So it doesn't happen. It doesn't happen slowly either. It's like one party's in power 100%, like all three, chambers they run, and then we switch them out so that, roughly 4 to 6 years later, the other party is 100% in all chambers. So
yeah, exactly.
It's a wild cycle to me. Like, I watch that and I just can't logically make sense of it, other than that just as Americans, I think we have this reliance on those who are in power, and rightfully. I mean, they are the ones that write the bills, right, that affect us on a daily basis, and yet, and now I'm kind of getting on a soapbox here, but I think it has to be more about us, like taking personal responsibility, taking personal ownership of my own life, and not pretending like everything that impacts me is from what happens in Washington.
Yeah, it's actually a good point. And we're kind of seeing that with TikTok right now. All these like congressmen are coming on and they're being like, if you want this bill not to be passed, like, you need to call your congresswoman or man, and you need to talk to them and tell them that you're not going to vote for them. You will not run against them, but you'll protest against them, and you'll help rally with the other side. You need to make them spend their money in the primary. Like, you need to take action as an American. And me and my generation, we're like, you can call your Congress people. They'll answer the phone. So it's interesting how they like to keep it quiet, and how, like, you're right, like, the power's in our hands right now.
And as an entrepreneur, like, I mean, you live in New York, you're considering moving to Texas, you're considering like changing how you approach your life in very fundamental ways.
Yeah.
And that power that you have to do that is not going to change. Right.
I will say one more thing, or two more things on closing remarks. One, very interested to see how much larger, blown out of proportion, this Chinese-Russia deal is, with the no longer using the U.S. currency. I think I'll look back at this podcast a year from now and see if I'm going to laugh at this comment or not. But it seems like it's been blown so far out of proportion that the whole world is crumbling and the U.S. dollar is meaningless. And then I highly encourage anyone to go check the GDP pie chart and see what percentage of GDP like India is, that's using the rupee now, and Saudi Arabia is, and what percent of GDP America and Europe is, because it's absolutely insane. And it's just been funny for me to see the markets kind of react to this massive news. This China, Russia is not, doing oil trade in different currencies. That's kind of what I'm curious about. One thing that I learned in the last 12 months that I would like to shed on to anyone, no matter their age, is how important dividend stocks are. Again, with all of my learnings as just a stock market journeyist, if you will, I avoided dividends because they're boring, and you have to own a lot of them to make good money. And then one time I was looking back at all my dividends from the S&P 500. I think I had like 15 grand in the S&P 500, and like every quarter I was getting paid like $250, and then a little bit more because I'd always reinvest them. And I was like, okay, wait, this is actually like a little bit more money than I thought. And then I started like doing more research in Dividend Kings, which are companies that have been growing their dividend for 50 years and increasing for 50 years consistently. And I'm like, okay, I get it. I'm young. I have tech on my side. I have years, but also like, if you want passive income, this is one of the easiest ways to do it. And it's like, it's legitimate. It's slow. That's what I love about it. It's so slow. Don't expect to make 10 grand tomorrow, maybe 10 grand in a couple of years, maybe 10 years if you're lucky and have enough invested, but it's legitimate and it's fair. And I just encourage more people to like do boring investing and just like, if you're really passionate about something, like go put that energy somewhere else. Like let the stock market be boring, or go into private banking. I'd say it's black and white. There's no need to try and be a day trader or an options trader unless you want to dedicate your life to it.
Yeah, no, I think that's sound. The dividend, that's a locked in return, right?
And when companies have been doing it for 50 years and increasing it every quarter for 50 years, I mean, it's a kind of a no-brainer. And it's just patience at the end of the day. And I'm not just saying go type in highest dividend yield in the market and then buy it, because like anything in the market, there's nuances here. But you look at a company like Coca-Cola, which has had steady growth over the last 50 years, and then you look at their dividend, and it's like, maybe I should be allocating 10% of my portfolio to that.
Awesome. Okay. Well, thank you so much for joining us, Russ. What's the best way for people to find you?
I am Invest with Russ on everything, whether you go on Instagram, TikTok, or YouTube. TikTok might get banned, so let's say YouTube. Let's go Instagram. No, Invest with Russ on all platforms. Rod, it was such a pleasure. Thank you so much for having me.
Absolutely. Yeah. Thank you so much for joining us. Okay. Thanks, everyone.
Let's schedule another one for a year from now, and we'll see how the currencies are doing.
Go back and take a look at it out. Sounds like a deal. Awesome. Alrighty. Okay. Thanks so much. Thanks, everyone, for joining us. We'll see you next week.
Thank you for listening to the Money Insights Podcast. To learn more about the financial and business strategies discussed in this show, please visit moneyinsights.net. The views and opinions expressed on the Money Insights Podcast are not intended to be individual financial, tax, or legal advice. Always consult with the appropriate advisor before making financial decisions. And if you're enjoying the show, please feel free to rate, subscribe, and leave a review wherever you listen to your podcasts. This will help others find the show and learn wealth building strategies for themselves. Thanks again for tuning in, and we'll catch you in the next episode.